Okay, gang, looks like we did have our move up this morning. However, we did not sell off. This is Red with RedDragonLeo.com, and today is March the 30th, 2011, Wednesday. So we still got tomorrow for the market to sell off some. I'm a little surprised that they didn't pop it up as I thought, and then sell off. But then again, I shouldn't be surprised, because with these gangsters in the White House, we all know that it's nothing but a bull train, man. It's a bull orgy, folks. That's all it is, a bull orgy, and Ben Bernanke and Timothy Geithner are in it together, and Bush and Clinton and Obama. Did I miss anyone? Oh, there's no girls in that orgy. Bummer. Well, that explains it, folks. That explains it. Anyway, I did think, man, can't even talk here, tongue-tied. I did think that we would go up. After we went down on this date, and then we went up, I thought we would go up here and then end and come back down and break this rising wedge. But we didn't. We pushed up higher. I actually should have figured that they were going to go up here and hit this wall of resistance. And I wasn't really also paying attention to the Dow chart. And I didn't realize how close we were to a double top from back here on February 21st, 22nd, a time period there. So that was very significant, and I believe that is what pushed us up a little bit further, which pushed the S&P up a little bit further to its next resistance level, which of course is that topping area right here, as opposed to this one here. So I kind of thought that that was where we was going to hit, around this 1325 area on today's gap up, and then crap, and then fall and break out of this rising wedge at some point. So that did not happen. So the wedge got extended a little bit more, so we got pushed up a little bit more. And from the looks of it, what I'm thinking for tomorrow is that we go down early on, hit this bottom part of the wedge again, and then run back up one more time to hit it again, and we should probably take out some of these overhead stops right here, but I don't think we're going to make it to this top. I do not. I think what we're going to do is close the gap that that is right here. This is Cobra's chart, and this is very much what I think is going to happen. Only I think we're going to push up higher. I think we're going to close the gap. When we get that close, I think we're going to close the gap. So the Cobra just has us hitting the bottom of the gap, but I think we'll actually close it. So that'd be 133.50. But I think we're really going to have to look for the VIX fake print that we showed as well. Now, I looked at it several times, and you can see in here on the daily chart as just a bottoming tail, and it does show 1725. But at the very time that that happened, in the morning this morning, which was, let's see, that was at 9:50 a.m. It was a very long candle from all the way from 1780 all the way down to 1725. The corresponding move up on the SPY was not there to match it. The SPY for that same time period, same 5-minute candle, was pretty much flat. It was just a very, very tight range at 950. It didn't move hardly any. It was right just a little bit. Let's see, it opened at 132.52. Got a high of 132.60 and a low of 132.47. It's only a 0.13 a 13-cent range. So that does not correspond with this at all. It should have went up 50, 60, 70 cents at least, which would have been 6 or 7 points on the SPX for it to drop down like that. So that does not line up. That's why I think it's a fake print. I think we'll hit it before the market rolls over, probably tomorrow. So looking at it on the Dow, you can see we are not very far off from hitting this top. You know there are a ton of bears waiting right there, okay? And by dipping down here tomorrow morning and then running back up one more time. And I do expect a pierce of this double top from back here on the Dow to take out some of these overhead stops. But I think it's just going to be a quick pierce, then fail, and then just bust on down through this rising wedge as it comes to a conclusion. So will that happen tomorrow at any time? Tomorrow morning, tomorrow afternoon? I don't know. I would speculate it's going to happen in the either afternoon tomorrow, or it happens Friday morning. That's a possibility. And what that would basically allow this to do is, if you to look at this right here, it would allow the 60-minute chart to roll down here, put in a smaller histogram tower in the negative below zero territory, putting in a positive divergence for it. Right now we got a small negative divergence on this, but not a lot, and so it would kind of put in a positive divergence for it if the market moved down, indicating it would go back up just one more time. That's kind of what I'm thinking here. I think that's correct if I'm saying that right. So just for this short term, I do think it's going to cycle, push back up one more time to allow this pop to get up here, take out this high, pierce it intraday, and then pop back down. So that's kind of what I'm looking for tomorrow to happen on the Dow, which at the same time it would allow the SPX here, or the SPY, I'm sorry, the SPY, this is the XPX, to take out the stops right here. You know, there's got to be a lot of stops sitting right here at this area. I don't think that there were that many here at this area, because how much time did they have up there? Basically, they were moving up, moving up, moving up. They really only had one day there, and then it collapsed. So they didn't have a lot of time right here on this date to set stops up above here. But here they had this day, this day, this day, this day, and partially these 3 days here, a little bit of these 3 days, certainly. So that's at least 4 days, possibly 7 days of sideways consolidation there, up and down moves, that they would have put stops right above here. Many of them would have put stops right above here. Some of them would have put it right here. I just don't know if we're going to get that high or not. I don't think we will. I guess it's possible they can push it up that high, but I really think we're going to dip down and roll down first, roll over first. Now, Kevin pointed out in the blog that this is starting to look like an inverse head and shoulders, and yes, it is. You can see if this was the left shoulder, then up, then back down here for the head, then up, and then possibly back down here, maybe to hit this area here, which is, or this area here. This here's the center of these Bollinger Band channels. It's what this is, but it could hit just there and turn and bounce and go back up. That's a possibility. Or it could go a little bit deeper and hit this 100 moving average as well. Put in a higher low than this 1249 area. That's a possibility. So let's look at what the odds of each one of these things happening versus a wave 3 down. So if we roll over here and start to head down, if we take out this and head on down to somewhere in between these two right here, maybe hit this 100 or maybe hit here. Either way, if we do that, it's going to take how many days? If we start counting the days and we start rolling this thing over, I'd say 1, 2, 3 days easily, probably, just to get to here, unless it's some really big moves. And to go negative and dip below negative, you could take it on down to here. And it could take another, I don't know, possibly another week. So it could go down, possibly hit here, and then start to cycle back up. So it could curl over here, go down here for a few days, maybe 3 to 4 or 5 days below zero, and then recycle back up and put in positive divergence and recycle back up. If that's the case, then that would take us into, I don't know, maybe by this week here, this April 11th week, that it would have bottomed and recycled back up. If that's the case, then we could go back up on a inverse head and shoulders and go up to our fake print of 138.86 on the SPY, which is about 1388 here. And that's probably about the same target if you measure this distance down for a head and shoulders breakout, obviously. So I'd have to check on that, but I'd say it's probably around the same target area. Now, if that plays out, then that could take us all the way into the end of April before that happens. By the time we move down and cycle back up, it could easily take us into the end of April. Now, that particular print had a volume of 4,290. Does that mean the fourth month, 29th day, April the 29th? Very well could. So you got to keep that in mind. It could be telling us that volume could be telling us the date of April 29th that it's going to hit that high. Now, that is probably really the most bearish case, because once it hits that high, then, I think it's done for, and we're going to really take our primary wave 3 down, and it won't last out till June. Now, the other scenario is that we go deeper, we roll over here deeper into a wave 3 down, and go down here possibly as low as this 200 moving average. This might move up. Right now it's sitting at 1193, but by the time we get down there, it could easily be at 1210, 1220 by the time we get down there. If we do that, then obviously this is going to roll over and go pretty deep on the daily, and it should put in probably lower. I would estimate this probably going to be lower histogram towers here on it, and then that would indicate possibly that that 138 print's no good, and the high is in. That's if it puts in lower histogram towers. If it puts in some higher lows indicating positive divergence as it goes down, then you could say that we would most likely go back up and put in a new high. But right now we don't have any positive divergence at all on this market. That's the reason we are looking for this to roll over and put in a lower high on the histogram towers below zero, so that we can draw a line here and indicate that we got a positive divergence. But in order for that to happen, we need this market to sell off. It really needs to go below this current low right here is what we really need to see. Whether or not that happens or not, I don't know. I just don't know at this point whether or not we go lower or not. But obviously, this could roll over. We have a lot of room to go on the downside. It could roll over here. It's up in bull territory though, so it could stay there a while. I just don't know which one it's going to do. Whether it's going to roll over and just put in a right shoulder, or go down into a wave 3 and possibly go as low as there, or stop somewhere between. There's also this horizontal support right here at this 1220 area, which will make a good target, especially if this works its way up to that area by the time it gets down there. Of course, if it takes that long to get down there, you could expect it to go into late April, and then you're not going to see that that fake print hit on April 29th. That's just not going to happen. So which one's going to play out, I don't know. But as again for tomorrow, I am expecting this to roll down into negative territory and curl back up. So I expect it here to roll down, hit this, probably close this gap, and then cycle back up and possibly pierce above it to take out these stops at the same time that the Dow is going up and putting in its double top. So all this at the same time, we should hit our VIX print as well. Will this all happen tomorrow? I doubt it. We'll probably go down tomorrow and try to attempt to rally back up and struggle and maybe close with a spinning top or something tomorrow. Could very well be. I tried to look at some previous days to try to figure out what it kind of looked like, and I think I had come to the conclusion that it's going to look more like well, let's see here. Don't think I was looking on this chart. Maybe I was looking on this one. Okay, I was looking on the SPY. That's where I was looking. Okay, to kind of give you an idea of what I'm thinking is going to happen is it's going to kind of look like this move here. Okay, this kind of gives me the best idea of what I'm expecting. Well, we had a large up day like this, and then we had another smaller body like this. Okay, this was not a gap up, but it was still a smaller body than this one. That's similar to what we had here, and what I'm thinking is that we had a large body up. We did gap here with this, but the body was still smaller than this one here. So the next day we seen it dip down, sell off, and in this case, oh sorry, this one here, I'm looking at the wrong one. Dip down, sell off, and then close back slightly down. So that would indicate kind of the same thing, kind of dip down, possibly close this gap, then come back up and put in some type of spinning top or a slightly negative close. Now the following days we had 1, 2, 3 up move days. I don't think we're going to have that. I don't think it's going to follow that to the letter. I think we're just going to have the one up day, possibly a big up day on Friday since it's April the 1st, and then close that gap, as well as hit our double top for the Dow and our VIX print. And then I think that's it. Then the next week I think we should break this wedge down and sell off some, and then at that point again we're just going to be looking for either a right shoulder to develop on this inverse head and shoulders, or a wave 3 down. We won't know until we get there. So hopefully that all makes sense to everyone. And so looking here at the 30-minute chart here, we cover it. The same thing. This is a pretty strong tower up, and it negates these two here, putting in negative divergence here. So this one stands all by itself. So you can kind of expect it to cycle down and recycle back up, and then put in a smaller histogram tower, putting in negative divergence. So that means down tomorrow and up into Friday to put in a smaller tower tomorrow, or smaller tower on Friday, but a higher high. So it would go up. Same thing here. So and the same thing here. It's got a long ways to run tomorrow on the downside. It really does, but that doesn't mean it's going to go all the way down. It can very well just go something like this, halfway down, hit the 50, and curl back up. Because when you look at this one's also got a long ways down to go. So, of course, now here's the wild card. If anything political happens, or news or anything like that happens, and we break this rising wedge, all bets are off, and we're going to fall pretty hard. And I would expect this full stochastic to go all the way down here to 20, and I expect this to go down here and put in pretty deep trough low here on the histogram towers. That's the thing, and it would start a nice move down if that happened. Right now, there's no news out, nothing to cause the market to tank. But so either way, if you're already short, you're either going to have to wait it out as it just goes down here, bangs on this, and shoots up for one more high, and then next week sells off. Or if we're lucky, it just gaps below this right here, below this 1320, and just sells right off. I don't think that that's going to happen, but it's always a possibility. So keep that in mind as well. That would be beautiful. Or just a gap right below it and just keep on tanking. So on the weekly, that could be a wave 1, a wave 2, and a wave 3 if that scenario happens. If not, and we just go down a little bit and still close positive, then we should go up a little bit into Friday and bring that back up, and then this would just end up with a positive close here on the weekly, and it would be like a wave 1 down, a wave 2, and then the next week should start our wave 3 down. So either way, I am looking for this double top on the Dow and a slight pierce of it if they can get through it and take out those overhead stops. At the same time again, probably piercing this to take out these stops. So, you know, if they fail to take it out, there's a lot of stops right up here, as you can see. Especially when you look at them on the daily here. You can see there's at least 4 days of people that's got stops right above there. Question is, did these people put them just above there, or did they put them up here? If they put them up here, they're not going to get these stops the first round. They're going to have to wait until later when they go up to that 1388 fake print, you know, so if that's the case. So okay, gang, that is it. As you can see, the 5-minute chart is still pointing down, but could curl back up at any time. It is oversold, but can still push down easily to -2 or curl back up. As far as the 15-minute chart, same thing here. It is pushing down. It's not oversold yet. It can go down further here. It can go down further here. And it can go down a little bit further here before it gets oversold. So this all lines up for a push down tomorrow morning. And then we just wait and see if it breaks this rising channel, if it breaks this 1320 area, basically where this gap fill is. If it breaks it, all bets are off and we're going down. So that's what you're looking for, gang. Okay, good luck, everyone. I'll see you all tomorrow.